Mr. Liniger, great to see you. I believe you're now in your 50th year with RE/MAX. Is that correct?
Yes, we just had our 50th anniversary, big convention, 10,000 people here in Las Vegas, and it was very exciting.
Well, one of the things I want to start with is this concern about the housing market. You've got a perspective that few have in terms of just where this fits. You've seen over the last 50 years plus. Where are we right now? What do you think of the state of the housing market? Are we too concerned about some things, not concerned enough about others? Let's just start there.
We're kind of getting close to the end of the problem. Obviously, the biggest aspect we have to deal with is the interest rate. Traditionally, since RE/MAX was founded 50 years ago, the interest rate has had an average housing market for mortgages of 7.76%. If you go back over a period of 7 or 8 different recessions, that interest rate changed off and on. 1980, 81 era, when they were trying to stop inflation, they moved the interest rate up from 7% to 16.5% on FHA and VA mortgages. It took a couple of years for that to taper back down to a more reasonable 7%. A lot of people did buy at the high interest rate. They refinanced, so they weren't stuck for 30 years, so to speak. And then we've had about 12 or 13 years of the lowest interest rates in housing that we've seen in history.
And probably we'll never see again, do you think? That's what a lot of people are telling us, that it's an anomaly.
I don't believe that we'll ever see 3 or 4% interest rates again. The world was just so cash rich, with so much money chasing so few deals, that people were quite happy to get a return on the investment of 3 or 4% long term. Unfortunately, that is gone. The world has gone into several black swans that are affecting our economy and the rest of the world. And so for the foreseeable future, it's hard to forecast. I do believe that the interest rate's going to stay in the 6.5%, 7.5% through the fourth quarter, maybe even to the first quarter. Mm-hmm. But then at that point, the Fed will loosen up and it'll start going back down. So I just don't think we're going to see 5% for quite some time.
Now, I'm here in New York City, and I know in a lot of cities across the U.S., the concept of the starter home, something that my parents had, it feels out of reach for a lot of, especially young people coming up, just given the housing prices. What are you seeing? And I don't know if there's any particular fix for this other than increasing the housing stock.
Yeah, it's a very difficult process to deal with. In reality, the excessively expensive homes have the last 15, 20 years been on the two coasts. The West Coast with California prices, then East Coast, especially you get up in the New England area and so on. Those have kind of led the higher priced properties. The Midwest has been more reasonable. I think Texas, Florida, maybe even Georgia, and they've been fairly decent, not subject to the swings. And so it's very difficult to get a starter home. The worst thing that a realtor can have is a good memory. When you can remember 50 years ago, I was selling houses at $10,000 and $15,000 that are now selling for $400,000 or $500,000. It affects your thinking, but everybody's income has gone up dramatically. You have basically 2 income families, and so people adapt.
Is there? Let's step back from the cities a second and talk about what's changed during the pandemic. We've seen this migration out to the suburbs to some extent. Are you seeing any trends in terms of it moving back into the cities, or is this something that's going to continue in a way, this move toward away from the coasts as well into some of these second tier markets?
Well, I believe that I was widely quoted, I don't remember, 15 years, 17 years ago, when everybody was talking about the millennials and the younger people all wanted to move into the downtown core areas. They wanted the museums, sports, bars, entertainment. As a matter of fact, there were a lot of baby boomers that were retiring, and they were kind of moving into the area downtown. Unfortunately, I had predicted that several things would happen. One, when you're single or newly married, no children, you really don't care about parks or schools or churches. And all of a sudden, you get a couple of children and a couple of dogs, and rentals and apartments aren't looking like that good of a deal. And so, with the extraordinarily high prices in the downtown areas, we started seeing about 6 or 7 years ago people being forced to move into the suburbs and start commuting. And then, of course, that was accelerated dramatically during the pandemic when all of a sudden we realized how big a percentage of the workforce could actually work off location. So some people can't. I mean, if you're working in a fast food restaurant or you're in a department store, that's a little different problem for you. I think that the trend of continuing to move to less and less expensive properties, which is the suburbs, and putting up with a commute 2 or 3 days a week, is probably going to continue.